You've spent decades building your real estate portfolio. Through market cycles, tenant issues, and constant maintenance, you've grown substantial equity tied up in properties. But the moment you sell a highly appreciated property, you trigger a cascade of immediate liabilities, specifically capital gains taxes and depreciation recapture. Without a specific transition strategy, a large percentage of your profit vanishes before it reaches your bank account. The traditional answer to this problem is a 1031 exchange, but that process forces you onto a strict 45-day legal timeline, putting immense pressure on you to quickly identify and purchase another property. An effective transition strategy aims to solve three specific problems: deferring the immediate tax bill, insulating principal from market shifts, and removing forced transaction deadlines. Many sellers reach a point where they want steady income, but they are finished with the headaches of active property management. For this scenario, we use proven, fully compliant financial tools, specifically fixed and indexed annuity structures. This structure allows you to move equity from a physical building into a contractual stream that generates yield while maintaining its tax-deferred status. This creates a lifetime income stream while building a barrier around your original principal, shielding it from market downturns. By locking in your gains and establishing a reliable payout, you reduce the major financial risks associated with funding your retirement years. You are essentially trading the unpredictability of physical real estate for a structured income stream that is not tied to active management. Other investors want to keep their capital deployed and growing, but refuse to operate under the constraints of a traditional exchange. In these cases, we implement specialized insurance-based planning structures. This alternative provides the same benefit as a 1031 by successfully deferring those capital gains taxes. But unlike a 1031, it eliminates the countdown clock. There is no 45-day window and no pressure to buy another physical property just to satisfy the tax code. Your reinvested funds maintain ongoing growth potential, backed by downside protection to prevent losses. You get the specific tax advantages of an exchange, but you retain control over when and how you deploy your wealth moving forward. These strategies apply directly to property sellers sitting on large capital gains, and to veteran real estate investors who are ready to retire from active management. They are equally effective for families navigating estate transitions who need to protect inherited wealth from immediate taxation. The end result is a customized plan that maps out your exact tax exposure and aligns with your personal financial goals. This planning process is collaborative. We coordinate the strategy directly with your existing CPA, your attorney, and your financial team to ensure total alignment. If you are currently preparing to sell a property, or if you have just completed a sale, your window to act is right now. The first step is scheduling a brief, low-pressure conversation to run your numbers and find out exactly how much tax you could save. You have the power to step away from property management, keep the equity you built, and secure a predictable financial future on your own timeline.